Internal Revenue Service IRS tax news. Farmers and ranchers affected by drought have additional time to replace livestock. IRS Tax Tip 2021-146, October 4th, 2021. Farmers and ranchers who were forced to sell livestock due to drought may get extra time to replace the livestock and defer tax on any gains from the forced sales. Here are some facts about this to help farmers understand how the deferral works and if they are eligible. The one-year extension gives eligible farmers and ranchers until the end of the tax year after the first drought-free year to replace the sold livestock. The farmer or rancher must be in an applicable region. An applicable region is a county designated as eligible for federal assistance as well as counties contiguous to that county. The farmer's county, parish, city, or district included in the applicable region must be listed as suffering exceptional, extreme, or severe drought conditions by the National Drought Mitigation Center. There's a link to the National Drought Mitigation Center here. All or part of 36 states and one U.S. territory are listed. The list of applicable regions is in Notice 2021-55. There's a link to that here so you can take a look at these links. There'll be a link to this in the description. You can take a look at these links to drill down and get more information on it if it's applicable to you. So it's on IRS.gov as well. You can look it up on IRS.gov, IRS.gov, Notice 2021-55. The relief applies to farmers who were affected by drought that happened between September 1st, 2020 and August 31st, 2021. This relief generally applies to capital gains realized by eligible farmers and ranchers on sales of livestock held for draft, dairy, or breeding purposes. Sales of livestock such as those raised for slaughter or held for sporting purposes or poultry are not eligible. To qualify, the sales must be solely due to drought, flooding, or other severe weather-causing region to be designated as eligible for federal assistance. The farmers generally must replace the livestock within a 4-year period instead of the usual 2-year period. Because the normal drought sale replacement period is 4 years, this extension immediately impacts drought sales that occurred during 2017. But because previous drought-related extensions affected some of these areas, the replacement periods for some drought sales before 2017 are also affected. Details including an example of how this provision works are in Notice 2006-82 on IRS.gov. So take a look at that notice. I wish I can give you more detail here. This is not my area of expertise, though. So take a look at the notice. We got the Notice 2006-82 and the other links here. And there's more information down below, which is in Publication 225, Farmers Tax Credits. So again, there's links to that information here. There'll be a link to this in the description. You could find the information on IRS.gov, IRS.gov, the IRS website as well.